Eric Muather at muather.com with world market analysis for the weekend of June 4th and June 5th, 2016. Take a look at markets here in Asia. We are seeing that most of the markets were up about 0.5% on average as of Friday's session. Take a look at the European markets here close to the end of the session on Friday, and we can see a mixed picture here. As you can see, Brazil is up 0.8. The Canadian market is unchanged. And for the US market with half a session to go, so midday here in the US, and we see that the US market is down about, let's call it about 0.5 to about 1% on the major averages. Gold is up 2.5% and crude oil is down about 1.2. So let's take a look at the charts. But before I do, just want to point out that I will be absent as of next week during the Friday and Saturday session, because I'm going to be traveling again Friday and Saturday, so I will not have a world market analysis for you guys. I should be back after the coming week. Anyway, so let's go to the charts here. Take a look at the Australian market. We can see that it's down about 2% for the week, and it makes sense because if you take a look at the weekly chart, this is where the RSI had shown resistance coming off the highs of 2015, and we've been drawing a line coming off that level, and that's the uniformity line. You can see that the market did come here, hit that line, and now we are pulling back. So until we can clear the blue line, we have to assume that now at best the market is going to be sideways. You take a look at the monthly, and you can see that the monthly chart here, and we can go back, let's call about 13 years on the monthly chart for the Australian market. Just want to show you what I think is happening here is we are coming back to test this break point. The break point on the monthly chart brought the market off the highs of 2015 here, and so we are coming back to test that level. As of right now, we are stalling, so let's just draw a line from there. You can see that we've come here, we've hit that red line, and we are pulling back with uniform action rejection. That tends to be a sell signal. So on the monthly chart, it is confirming the weekly chart, which is telling us that more than likely, especially if the RSI on the monthly drops below 50, expect a big down month. So the monthlies and the weeklies, as far as the Australian market is concerned, do point to a market that wants to pull back. If we take a look at the Chinese market, we can see here that it is coming back after a nice move of the last couple of days, but coming back to resistance on the daily chart. If you connect the RSI highs, so you can see that it connects nicely to the highs here, the previous highs, and also coming back to the highs here of early this year, now coming back and hitting that level. So that's one layer of resistance, and the other one is off this red line here, which has been a problem. In fact, you can see the highs of December before the big drop did happen to be around that red line, and since then we can see that this was also rejection around the red line for the highs here, and now we are coming back to test that red line. So those two lines do represent some strong resistance. One can expect after a slight move high in the past week, day to day, that the Chinese market is also pointing to resistance. Now if you take a look at the Japanese market, the Nikkei, you can see here that to be consistent with the Chinese market, it is also coming back to test the top side. Over the past week, we hit that line, which is perfect resistance, and hence the move lower. We saw a big drop on Thursday because the RSI moved below 50. As you move above or below 50, you tend to have a big reaction up or down. So that was well-defined resistance on the top side again, and also there is a line which should be somewhere from this break. So there was a break recently somewhere there. That RSI break brought the market off the highs of December, and you see that there was a big drop. So we know that that was a serious sell signal point. We draw a line from here. So this red line has been a problem. It was resistance during the highs of April for the highs there, and a pullback. We come here early part of June, we hit that line, and now we are pulling back. So we can see that until the market can clear those two lines, we are looking at a market that should be sideways to down at best. Also, we take a look at the weekly chart for the Japanese market, and we can see a simple line connecting RSI highs came into play this past week. So this line connects the highs on the RSI on a weekly basis, and here and again over the past week we hit that line, and now we are pulling back. So that's very strong resistance for now. The market does need to clear that level if it is to see higher prices. Also, if you take the break of December, so this break in the RSI somewhere here brought the market off these highs, and so we draw a line from there, and we can see resistance, and we can see that the red line, so this red line was resistance with the uniform activity rejection here for the highs there and a pullback, and now we are seeing uniform activity rejection here, and already we are seeing the pullback. So until the market can clear the red line and also move above the previous RSI topside, as far as the Japanese market is concerned, we should continue to expect a pullback in that market. Let's take a look at the Indian market here, and let's begin with the positive. So what's positive here is we see that over the past week we did manage to move above this line of resistance connecting the previous weekly closing highs. Weekly closing highs right there, and the weekly closing highs are here, this weekly closing high here, here, and also here. So we form a nice straight line. So the market did move above that. That's a positive. Also, we see that the market moved above the previous line of resistance on the RSI. So that's another positive. So those are two positives that, for those who would like the market to move higher, can use as a reason why the market should continue being favorable. Also, we cleared this daily closing high, the previous daily closing high for 2016, and the level that the market needed to move above, and it has already done so, was 7899.30. So we moved above that level there, and obviously as long as the market is above 7899.30, maybe the market has a chance of moving higher. So all those are positives that somebody can use to continue holding and expecting higher prices. Now I want to take a look at the negatives of the potential for resistance around current levels. So if you take a look at the recent price break going back to 2015, so this price break here with a gap down, so there was a huge gap down here. So there was a price break, trend line break there, draw a line from there. And what you see is that the market has come back and tested this line and did show resistance, and now we are coming close to that level. So we would expect some type of resistance here if the market cannot clear this line that comes off the break right there sometime in July 2015. So that's, in my opinion, is a negative. If you take a look at the RSI, and in my opinion, if I was to decide which of these scenarios is going to play out, I will take this scenario as being the one that is controlling, and it is the resistance based on this trend line break here. So this trend line break was serious because it brought the market off the highs of 2015. So we draw a line from there, and you can see that it is perfectly coming back to test that level. The reason why I suspect this is going to be resistance, in my opinion, and that as we begin the new week and going forward, this is going to be confirmed as resistance. That's what I suspect is going to happen. I could be wrong. Is because also this red line happens to be at about 61.8. So because of that resistance, the more we start seeing the market roll over and show uniform activity rejection on that line, that would suggest that now the next meaningful swing trade is going to be lower. And the reason why I lean towards resistance is because on the hourly right now, we see that the market did make a move to short-term highs on the hourly, but that move did come with declining RSI strength, and as you know, negative divergence. So negative divergence tends to be a problem. So I think based on the weekly chart coming to resistance and this negative divergence on the hourly, I lean to a market that could easily find resistance at current levels. If we take a look at the South African market, and here I'm using the South African market Dow Jones or South African market index. Just want to show it's very similar to the Indian market in that it is showing price short-term breakout in the price, which is encouraging. So it needs to continue holding above that 1750 level. That can be looked upon as being a good breakout. So the price is encouraging, but I think the RSI still has to prove itself, because the RSI is coming back to test the previous break line. This break in the RSI brought the market off the highs, and so we need to draw a line from there to figure out where we can find resistance in the future. And so we draw a simple line, and as you can see, this line has been resistance a couple of occasions before. It was resistance here for the highs of October, and we went to have a huge drop. It was resistance during this period here, and the market did stall around this level here. So we are coming back to test a red line. Depending on whether the market can continue moving above that level or not, we can determine the next swing trade. If the market shows resistance, then we can expect this move or this breakout on the weekly to fail. So I would watch out for whether the market can hold above this RSI line. This is where I think the line on the sand is above the red line, and that's good. Resistance on the red line would indicate that the next swing trade is lower. There's also another way of looking at this, which is go back to the break of the trend line on the weekly chart here. So the RSI did break down here, again similar to the Indian market. This break was with a huge gap down, right? So we can draw a line from here, and right now I think the market is coming back to test this line. Previously it was resistance on this line here, again was rejected here, came close here. So I think if we can stay above that line and also stay above this red line, there's a chance that the market could see higher prices. But if we see resistance here and a move back below that line there, then of course the next swing trade is gonna be lower. Now one thing I want to show you here is just from a learning perspective, we see that the recent move off the last couple of weeks did come at a level that was predictable, given that the market had come back to test this entry. So we can draw a line from here. This entry in the RSI brought the market off the lows of January, and we've had a nice move higher since then. So this line can also be used as support down the road, and you can see that the market did come here with uniform activity, bounce on that line which is off this level, and of course we've seen a market trying to move higher. So we see that the daily chart here did indicate some potential for support, and that's why we've had a nice move over the last couple of days. Let's take a look here on the daily. Take a look at the French market. And the French market here does show resistance. You can see resistance here on a declining 200-day moving average. Okay, also we can see topside RSI resistance coming into play right there over the last couple of days, hence the pullback. We can also see that it is coming back to test the RSI level that has been a problem, and let me show that. So this break here in the RSI, this break here brought the market off the highs of November 2015. We draw a line from there. You can see that the market has been finding it difficult to move above this red line. Every time it tries to move above the red line, it is rejected, and again here over the last week or so. So we can see the daily for the French market is showing resistance, and also this is similar to the German market. So take a look at the German DAX. Similar type analysis here. We go to the break. The trend line break brought the market off the highs of late November, early December, and so we know that this is a critical level. We draw a line from there. Every time we have uniform activity rejection, we get a short-term high. Uniform activity rejection here for the highs there. Uniform activity rejection here for the recent highs. And don't forget topside RSI resistance that is also coming into play. So net we see a market here that is struggling to hold current levels and already showing some signs of a pullback with Friday's move lower. You take a look at the weekly for the DAX, and you can see that you can draw a line connecting recent RSI highs, or even this way. Both lines show resistance, or you can use the break. So this break coming off the highs of 2015, there was a break, trend line break here just above 50. Draw a line from there, and you can see that it was rejected here with uniform activity for the highs there, rejected here with uniform activity for the highs there, and now rejected here for the pullback this past week. So until we can clear those two levels, the resistance on the uniformity line or resistance on the RSI top side, whichever way you want to look at it, until we can clear those two levels, we have to assume that this market is going to be sideways at best. Take a look here at the FTSE, so the London market, and on the weekly we can see similar type resistance, and it's a simple line. You take the break here. That break was instrumental in bringing the market lower off the highs of 2015. We draw a simple line from there, and you can see that this has been a problem, resistance here for the highs recently, and again coming back over the last 2 weeks, hitting that level and showing resistance. So clearly, until we can get enough momentum to move above that line, this market is also suspect and prone to lower prices. Let's take a look at the TSX, the Canadian market, and similar to the Indian market and the South African market, we see short term a breakout, and this breakout needs to continue holding above 13,951. So it needs to continue holding above the recent weekly closing high for this to continue at least having momentum to the upside. So while that is true, we can see that the weekly chart is coming back to test this level here. So the RSI does need to stay above the red line if this market is to see higher prices. Now I'll show you why, to be consistent with the Indian market, why this is a level on the hourly that could show that there is some type of resistance that the market is concealing. And on the hourly for the Canadian market, in my opinion, we continue seeing that we are still showing resistance on this line here. So markets recently have been making a move to higher levels here, right? But the RSI has not made a new high. So I think that negative divergence eventually does indicate that we should be looking for a pullback in the Canadian market, suggesting that the weekly RSI resistance might take place as we begin the new week. So again, on the weekly, the level to watch there is the RSI holding above this line here. If it can hold above that line, that's good. Otherwise, if it drops back below this line, that can be looked upon as being a sell signal. For now, since the market is above the previous weekly closing high, let's give the market the benefit of the doubt. Let's take a look at the Brazilian market, and I'm going to use the ETF that trades in the USA, the EWZ, in analyzing the Brazilian market. One thing I do like here is the fact that if you go back to the previous resistance around the 50 here, was resistance around the RSI 50 on the weekly chart for the highs there. But now we are seeing the exact opposite, which is that the 50 is acting as support. So week to week, this is good action. So as long as it is bouncing on the 50 RSI level on the weekly, that's good. Now, having said that, let's take a look at the daily. Keep in mind that the market is up on Friday, and we can see the reason why it's been moving higher does make sense, as we've observed in other markets. This off the lows of January, this is where the RSI began moving higher and coincides with the price lows, and since then, of course, markets higher, right? So we draw a line from there, and you can see that we touched the green line perfectly, and now we've been bouncing since then. So on the daily chart, we can see why the market has been moving higher. Now, having said that, you can see that we are coming back now. The equation flips because we are coming back to test this line. This recent break brought the market off the highs of 2015. So we draw a line from there, and somewhere around here is where one can expect resistance. In fact, if you take a look at the hourly, you can see that the hourly is coming back and showing resistance as we've seen in other markets. We got two lines. We got top side resistance on the hourly for the Canadian market. For the Brazilian market. Keep in mind, on my hourly charts, I'm using RSI setting of 26, just in case this is a little bit different from the way your charts look like. But we can see topside resistance connecting recent RSI highs and coming back and showing resistance here. So that's strong resistance hour to hour, suggesting that the Brazilian market and all instruments that move in step with this might pull back on an hourly chart. And right there, I'm trying to make a mention on gold. If we take a look at the break off the highs, so there's another way you can look at this, and it's simple analysis. And what we can do here is off the highs. So this was the break. We can go on hindsight. This was the break off the highs here on an hourly chart. We draw a line from there, and this line is in play right now. You can see resistance for the highs there, and coming back here today with a move higher in gold. And in the Brazilian market, we are back to show resistance on the hourly. Because of those two lines showing resistance, one can assume that this is where we start seeing gold and the Brazilian market at large pull back after a nice open on Friday's session. So I think as long as we see resistance here, remember, if it can move above that, that's good and might suggest higher prices. But if we continue seeing resistance on these two lines, it suggests that we might start seeing a pullback in the Brazilian market and all other instruments that have been moving in step with it. Otherwise, that's it. Keep in mind, as I said at the beginning of the video, I will not have my weekend market analysis for the upcoming weekend since I will be traveling, and I'll continue with the analysis the weekend after that, which should be the weekend of, I believe, June 17th, somewhere around there, 17th, 18th of 2016. Anyway, what I'm trying to say is that I'll probably see you guys in 2 weeks. Enjoy the next 2 weeks. Let's see how things go. Otherwise, peace and blessings. E-A-C-S. Mwah.